Gerard Cassidy, how important is stock selection as we go into the summer?
Tom, I think that's a key issue for bank investors is stock selection. Though the macro trends, of course, will impact all the banks, owning the best quality banks that will benefit from a steepening of the curve is the way to play it. Now, as you know, and you pointed it out in your graph, Wells is still challenged. They're looking for a new CEO. But when you take a look at Bank of America, JP Morgan, and Citi, for the large cap banks, those are stocks investors should look at.
Well, okay, you want to go large cap banks, but your claim is you do large, you do regional, you do mid, you do itty bitty banks with 200 employees. Where's the opportunity right now in the Cassidy mix?
You know, there's going to be a couple of places to look. When you take a look at the regional banks, banks that are not going to be negatively impacted on a net interest margin standpoint should the Fed cut short-term interest rates. As you know, there's an expectation that the Fed will cut short-term interest rates. The banks, for the last couple of years, have benefited from a rise in the short-term interest rates. However, toward the end of last year, that rise in short-term interest rates started to work against the banks. So banks that are not asset-sensitive, regional banks are the ones to look to. A good example is KeyCorp. KeyCorp is not a very asset-sensitive bank. M&T Bank up in Buffalo, New York, is another one that investors can look at that would not really be hurt by a fall in short-term interest rates.
Gerard, where do you see consolidation at all in the U.S.?
Yes, we do, Francine. When you take a look at the consolidation of the banking industry, as Tom and I know, it's been going on for almost 30 years now. We used to have over 18,000 banks in the 1980s. We're down to about 5,700. I think what you're going to see is more big bank mergers. What you need to see is some...
How big?
I would say big regional banks, similar to what we saw with the BB&T and SunTrust deal earlier this year. I would suspect that banks, when they start to struggle on profitability, are the ones that are going to be able to look to do a merger. We have to remember the last 4 to 5 years, the American banking system has achieved record profits. It's very difficult as a CEO to give up your job when you're achieving record profits. If we start to run into some issues on profits next year, that could be the catalyst.
But where were the problems from profits actually come from? What divisions?
Good question. I would say there's 2 areas that we could see. The first and foremost is this new accounting issue coming in for loan loss reserves called CECL. Though it's an accounting issue, it could create volatility in earnings. That, I think, could be the catalyst. And then second, if the Fed has to cut short-term interest rates too far, that would be the other area, the pressure on the margins. I think the banks will do better in the first 2 to 3 Fed fund rate cuts, should they come over the next 2 years. But anything more than that, I don't know if that would be positive for margins.